when you're under that pressure, you come up with some creative things to make it work. G'day, my name's James. I'm the Managing Director of Avenor, and this is Property Investor Podcast.
Fantastic. Well, James, I'm super excited to have you on today, and thanks so much for coming on. Well, firstly, just share with people and maybe just start off with saying your full name, what you do, as you mentioned, you're Managing Director, and also, feel free to share with everyone in the audience and brag about yourself.
Okay, no worries. I'm, so as I said, James Paver, Managing Director of Avenor, which is a property development investment firm headquartered in Sydney and operating up and down the eastern seaboard. And so we established this in 2016, and we've been growing over the last few years. So now starting to kick some goals.
Fantastic. So share with us what's your typical day look like at this point in time?
Typical day. Well, these days it's a matter of trying to get the guys back to the office because of COVID. So today I'm in the office, gearing everything up, and so starting getting the split shifts going next week, I think. So, which is good. But typically, it's a matter of working with my team across commercial and residential projects in Sydney, principally at the moment. And so, at the moment, a lot of planning work. So there's a lot of meetings with stakeholders, a lot of meetings with clients, and the end asset owners and consultants and builders. So there's a lot of that collaboration and engagement, and so that's a big component of it. And then the balance of it is spent with clients and trying to build some pipeline, and then obviously managing the business itself. So it's busy days, but it's good fun.
Totally. Yeah, I can imagine there's a lot that's happening as well. Has COVID also impacted any of the work? Because if the staff are not around in the offices and then managing stakeholders, dealing with councils and all that kind of stuff, has it sort of impacted and slowed things down, or has it still been going okay?
We're still stemming ahead, really. We've a couple of our major projects. One of our major projects has a lot of overseas stakeholders involved, principally consultant teams. So international design competition resulted in a lot of, so we've got consultants in Europe, in the US, in Asia, and in other parts of Australia. And so we were already operating on Zoom as a platform for collaboration. And so we were already established for that. I suppose we would have done more face-to-face involvement if it wasn't, but we're still steaming ahead. And that's a pre-committed office tower development. So in terms of the COVID impact to the market risk, that's been minimised for the most part. And in terms of the resi side, it's mostly okay. So there's some planning stuff at the moment. So it's not particularly impacted, but I think the collaboration part and the, I suppose, team building part of it is going to be critical to ramp up again. That's why we're getting everyone, back up and running next week.
Fantastic. Yeah, it's fascinating. I mean, because we're on a sort of a global scale that we can actually, remotely work, and with technology that's available, I guess, the connections are quite easy to do. Before, we'd probably just pick up a phone and have a conversation, but now with video conferencing, we can actually just do everything and even show things on the screen. So really, anything can be done virtually nowadays, pretty much online. So don't really need an office as much or such.
The part that did have a bit of a pause was part of the engagement with landowners. There's a lot of engagement, at that level, that it's definitely helpful to be face-to-face and being able to, communicate with, and understand someone properly. Being face-to-face helps. And so I think that'll be a big part of being able to get in the office, get back in front of landowners, will be a help.
Totally. Yeah, that sounds really good. All right. So, James, let's take a step back and I guess we want to probably get to know you personally. Let's share the story behind, I guess, some interesting facts about your past. Firstly, where did you grow up?
Grew up in Sydney. Grew up in Epping, actually. So, but living in the CBD for a number of years now, in amongst it. So, yeah.
Yeah, that's great. You're an Epping boy. I'm not
Yeah.
far from you.
Okay. Good.
And I grew up in the area as well too, so that's fantastic.
Good.
Did
Good.
you also go to school locally in Epping?
Went to King's in North Parramatta,
Yep.
and so I was pretty close by. Yeah.
Yeah, fantastic. So King's all the way from kindergarten to year 12,
From
or
I think from year 4. So I was at Beecroft Primary
oh yeah,
when I was a kid. Before
yeah,
that.
yeah. I know the area pretty well. King's I know very well because my neighbour actually went to King's as well, and
Oh yeah.
it's a really good school. So yeah, fantastic.
Yeah.
So from there onwards, I guess after finishing school, where did you go from there?
I actually took a year off and went over to Europe, and I taught English in Poland for 6 months. Believe it or not, I had absolutely no money, so I worked a bit in the summer before. Worked in a pig factory in Liverpool for a little bit and got some cash together, and then went over there, and because of that, I while other people would go into London or whatever, Poland was a good place where you could be somewhere a bit different, and then go weekends or whatever it is into the rest of Europe. So that was good. And then I travelled around for 3 months after that. A few adventures. Worked on a yacht in Croatia, on a luxury yacht owned by Greg Posh, who owns Star Trek trucks for a while, and sort of got some money together, and then travelled around Italy, Germany, France, and London. So
Wow.
that was good. And then after that, headed to uni, and started in property economics. And so that was where I suppose the property journey started. But and throughout that time, I was working in. I joined the reserves, and so doing officer training, and throughout university and a bit after. So that was good, and started working for John Boyd, helping him on 161 Castle Ray Street, which is the ANZ Tower now on Castle Ray Street in Sydney.
Fantastic. Tell us a little bit of background about who John Boyd is it?
Yeah, John Boyd, he's a private developer. So that was, I suppose, where I got my first exposure to commercial development. So that was it's I think a 55,000 square metre office tower on Castle Ray Street that was delivered by Grocon, and John Boyd had pieced that. Actually, I really liked it. He had some interesting, investment models as he was coming up, and he sort of built some wealth and started accumulating these properties in the CBD, and then off the back of that, he put together a Freehills lease and an ANZ lease that underwrote the development of that project. Now he owns the penthouse up the top of that, which is interesting. It's
very nice, very nice.
Up there, but yeah.
So Grocon, I've heard of before. I actually drive past it. Is that the actual one that's building the one that used to be where IMAX was? That building that's in the place?
The one, the Ribbon. Yeah, the Ribbon. So that's
it.
A cracking site down there that has been underway for a while, and so that'll be a great project.
Definitely. I mean, looking at the architecture behind that and the structure, it's definitely no easy one to do. There's a lot of suspending glass. A lot of glass.
Exactly. It's a tough one. I haven't had anything particularly to do with it, but it's obviously it's going to be a great addition to Darling Harbour, that's for sure.
Definitely. So let's take a step back. You did a lot of traveling for a year. That sounds like amazing. Great experience. I'm curious, why Poland out of all the countries?
It's a weird one. People ask this. To be honest, I don't know. It was through this program where they, you go and teach English, and I'm not usually one to just go down the well-trodden, standard path. I usually do something different, I suppose. So that was, I suppose, led me to pick somewhere that was in stone's throw from the rest of Europe, but could be a bit weird and different. And yeah, it was good.
Fantastic. Yeah, it sounds really interesting. So during that year, you did a bit of traveling throughout Europe, and you got to do a lot of exploration. And then you said you came back after that. What encouraged you to come back? Because a lot of people don't mind actually staying overseas and doing a lot more traveling. Why did you come back?
And I was keen to rip in. It was always, I think it was just go and get a bit more worldly and go out and make mistakes and have some fun, and then come back and start building a career. So I wanted to get into that, and so
yeah,
that's what I did. And I was excited to get into it. Yeah.
Yeah. So you jumped into university as doing property economics. During that time, you mentioned as well you went to the reserve. How did that work? Because did you study through the reserve, or did you do it at university?
Yeah,
and then
you do it in the holidays during university. I think it's one weekend a month, and then there's a few different modules that you do, but they might be a month long in the summer holidays, and the rest of them are 2 weeks long. And you go out, and some of them are pretty interesting stories. Like I think on the third module, like in the middle of throughout uni, in the holidays you're meant to go and get a rest, right? But then I went on this one, and part of the training was doing these 12-hour missions back to back. So there was eight days worth of this. So you'd average an hour sleep a night. Some nights no sleep, some an hour or 2 hours. And so then so that was interesting. So then you come back to uni and you're pretty exhausted, but it was definitely worth it. It gave me some leadership skills, gave me I suppose a greater understanding of people and how to work with people and how to work under pressure and high intensity pressure, I suppose. And then I worked through that, and but eventually I started working during uni at Investec Bank, being that the investment bank, and in the property team there, so the structured real estate finance team. And so there was this point in time where I was at university, final year of university, working in Investec Bank, in the army still, and started becoming a bit overwhelming because I was kind of doing these three intense things. And so then army was one of the first things to go, and then uni wrapped up, and then I was into the banking world. So it was high net worth property development investment banking.
Well, it's fascinating because most of the graduates that come out of university don't necessarily always go straight into where you went. How did you actually get yourself into that position? Because most people go, wow, I dreamed to do that, but it takes them a few years at least to gain the experience and then to jump into that level.
Yeah, well, at uni, I was at UTS, and they had a few different scholarships that they would run, and one of them, Investec Bank, would recruit from UTS. Well, that team would recruit from UTS, and they essentially, I think it was something like that. They'll give you a few grand to do a 3 months work experience thing, and if you do all right, then you'll carry on. And so I did that, and that was in 2010, I think that was. And so it was still pretty rough in the banking sector post GFC, and so it was a time where they were going through a bit of a restructure. And so then but during that phase though, it was there was still still deals getting done and a book that had to be managed and all of that sort of thing. So that was where, and it's sort of thrown in the deep end. You learn as much in your first week doing that as you do in your degree sometimes. So,
definitely. Yeah. It's like cramming a whole 3 years of your degree into 1 week for you, except it's real life practical experience.
Yeah.
And is that where you sort of came through and met John Boyd?
Well, no, I'd met him earlier. My uncle had introduced me to him and had landed me that job. And then that was just sort of a junior assistant DM sort of role, learning how offices work and how the world works, I suppose. And really that original one with John Boyd. But then after that, it was at Investec. It was as an associate doing property finance analysis and managing transactions through and managing existing debt books and mezz books. And so and through that, though, it was very interesting. I really valued that time because what it showed me was it gave me excellent exposure to high net worth property developers and investors, and across all sectors, across all geographies in Australia. So it meant that I developed an understanding around how the whole deal works across all the sectors, and exposed me to some really interesting and really, I suppose, successful individuals, and let me analyze and look at their business models so that eventually I could start adopting them and applying them like I'm doing now. So, I mean, I don't know, maybe I won't talk through some of them, but some of the smart investment models that they would apply, which focused around minimizing. I mean, on one end of the scale was minimizing the amount of equity they're using by securing underperforming assets and increasing that performance, getting bank debt against it, using that extra debt to get DAs, generating extra value out of the DA, going back and getting more debt to generate to deliver the project. And out of a small seed, they've generated this big book of value, of profit, but also the retained asset that they'll maintain. So then there were these clients that would have these book of assets. So some of them, like this one client had left school at 13 years old, become a panel beater, and then 17, 18, sold Fords and Holdens, and then he started doing development with his brother, and now they've got a book of over $500 million worth of assets. And when I was doing it, it was just a bit under that, and he was only 40 years old. So you see some of these models, and some of the rest of them, like some of them were a bit more cookie cutter, doing subdivisions. Some of them were, how to structure joint ventures and how to piece it together. And there was a bit of that I learned, I suppose, through that. It made me think, well, maybe I want to be on the other side of this fence rather than the bank here sitting there and having them brought. And I suppose it was around that time where I started forming a view of, well, I want to eventually own my own firm. And before that, I'd always thought I do want to own my own firm, but I didn't know what field it is. I didn't particularly care, to be honest, of what I would do, as long as I I could start building my own future. And then I made a decision around that time. Well, if I want to do that, do I want to go the funds management route and learn that skill set, and then eventually supplement that with someone else's skill set in development, or the other way around? Do I want to learn the on the ground, development skills, and then and then build, and then supplement that skill set with third-party capital experience? So I thought, oh, well, now I've got a bit of banking experience, I'll go the development route. And so it was a while after that I started working at, I got a job at Leighton. I got, through the closure of a lot of the banking institutions, Investec had a round of redundancy. So I snatched that opportunity and jumped ship over to Leighton Properties. So that's where I started building the development skill set, I suppose.
Fantastic. So because you're working in the banking sector, you actually got a lot of exposure to seeing, I guess, their books and seeing how that they would finance their deals and manage it, and you'd be able to help them find ways to finance it. You mentioned one example, which is a very interesting one, this 14-year-old who was, doing panel beating and then, from there, selling cars and so forth. Could you just maybe give us another example, just as a sort of broad stroke, on the type of high net worth type of developments that they'll be doing? Sort of just concrete examples. Are we talking like commercial property or large scale residential?
That particular one was pubs, actually. I think it actually started off as a post office was the first deal he did, I think. But then he built a book of pubs, and then just before the GFC, he had a book of 13 pubs or so, and then just before the the new smoking laws, he sold his book of pubs, and then the smoking laws came in, and then pub values dropped, and so he sort of cashed out at the top, and that kind of gave him some cash to start rebuilding his book. And then so that was, except then it was pubs with resi attached to them as part of the developments. So
yeah. Just wondering, how do these type of, I guess, private investors, developers get into this game? Because a lot of people still think that you need to get capital to be able to do that. And even yourself, you've jumped into becoming a property developer as well and successfully built up a property development business. What is it that they can do to start getting into something like this?
I was always sort of trying to think about some. I'll talk about myself in a while about how we did, but for the others, I think some of it was, a lot of it's through hustling with landowners, I suppose, and so being able to put the deals together. I'm just thinking of a smart developer out in Perth that was putting together, like, a very straightforward, but was putting together sites that had development capacity. It was a matter of he would pre-sell the end product and increase, but and it was simple products like 500 grand for an apartment or whatever, and he would pre-sell them with and you except say under an option arrangement, and say, oh, if you put in 250 grand now, then I'll give you a discount on the asset, and then that cash you would use to put into the acquisition of the site and the like. So, and then through that he would package up the whole development, deliver the development, and so these mum and dad investors or mum and dad owners would, I suppose, be participating in the development process, and he wouldn't have to use any of his own cash, but he would participate in the profit. So it was, and then because he had a building book and a sales book himself, he would clip the ticket on the building margin and the sales, and obviously the profit on the development without using any money. So yeah, and that's a pretty standard. I mean, it's not a standard one, but I just know that he executed that model really well.
For listeners out there who don't know what book means in this term for development, can you sort of just elaborate and explain for them as well too?
A book of this pipeline of numerous developments that are being delivered at any given time. So usually associated with your balance sheet, how many projects or assets you have on your books.
Okay, great. Yeah, it's just a completely different world when we talk about development, because investors, which is predominantly who we actually have listening to this podcast, probably understand about buying and selling, renovating, subdividing a property and so forth. But to actually go another level up, to actually turn it into a full business like what you guys have been doing is phenomenally a completely different concept. So a lot of these terms and stuff like that would probably have to sort of elaborate a little bit more for them to understand. But no, yeah. It's been really, really interesting to hear that side of things. Maybe just share with us, I guess, since now you've moved into Leighton, we'll take a step back into your time. You moved into Leighton Properties to learn all about development. Tell us about that journey until when you actually start up your firm.
Yeah, sure. So I went across to Leighton for initially, principally for a commercial development in North Sydney, which was called 177 Pacific Highway, which is now the Vodafone Tower in North Sydney. So it was a 40,000 square metre A-grade office project, 5-star Green Star and 5-star Neighbours. So it was an A-grade asset, and so I came into that before commencement in the establishment phase, I suppose, and it was it's essentially holy grail of commercial development for a developer, I suppose, in the sense that it was a pre-lease, pre-sale project. So Leighton, we essentially secured an option over the existing site, and had a 30,000 square metre pre-commitment for a lease pre-commitment. And so with that, it means that you essentially can underwrite the development with that fixed cash flow that is going to be available to whoever owns the building. And so we secured, the building contract with CPB, and then packaged that up, and then pre-sold that package to a group out of Singapore called Suntec REIT. And so, and they're a passive fund. They don't take development risk, and the deal essentially was that they will fund our initial establishment costs and 100% of the delivery costs, including our profit. And then on completion, they get the keys to an asset that is fully leased. And so as a developer, we had to take on the development risk. And so we would pass that down to the building contractor for the actual delivery risk. The residual risk for us then was the leasing. We had a 30,000 square metre pre-commit, so there was 10,000 square metres of vacant space. And then as we were delivering it, it was in 2014. So the leasing market was weak and incentives were high, and so we had to. So the pre-commit, which was Leighton, there was CIMIC Group, they contracted their headcount, and so they only needed 8,000 square metres now. So the job of now over the balance of the project, year and a half, I had to lease the balance of the 32,000 square metres of vacant space. And if we didn't, then there was a rent guarantee over all of that space, which would amount to, in the hundreds of millions of dollars. And so I embarked on that process, and then progressively leased to Vodafone, Jacobs, CBRE, Cisco, Pepper, Objective, and NBN. And then the NBN lease, which was the last one, I cut on the day before practical completion. So it was so we got there in the end, and it's a great project. So it's
wow.
It worked out right. But
how long did that process take you to find these landlords, or not landlords, sorry, these tenants to actually?
It was a bit of a hunt. So we had CBRE as our leasing agent, but it was so from 2014 we were into the leasing process for the balance of space, and then I think through the course of 2015 I closed the most of the deals, and then the fit out started happening in 2016, and so throughout, it was about a year that I did most of those deals.
Yeah, it sounded like there's a lot of hustling as well, negotiating, getting out there. It's not like you just go out to Vodafone and they'll just say yes, right? You'd have to.
You kind of got to be creative with what you've got at hand. So because there was pre-agreed structures with the end owner who was receiving the asset, it was a bit of, I suppose, playing tricks with the incentives to be able to work out, okay, well, if we generate enough income out of the sign, so we might have allowed a particular amount of money for the Vodafone signage income there, and then we do a lease with them for that at a different number or whatever it is, then that money can generate enough revenue out of the end owner to then feed back into the tenant's base rent, I suppose. And so there was a few things like that going on to try and make it stack, but I suppose when you're under that pressure, you come up with some
very creative
things to make it work.
So it sounds like you're thrown straight into the deep end, because this is not something you'd be taught at school or you would have learned at uni. How did you pick all these things up that quickly in such a short span of time? Because to do it all within, say, a 3-year period, most people learn all this stuff in 3 years to be able to find the right creative strategies to be able to lease, because it's not as simple as just signing a lease agreement and that's it. You have to actually structure the terms as well, right? Especially in the commercial.
Well, I suppose in the first instance I had really good people around me, so I think that at Avenor, my business partner Pete Clemisher, he was at the time at Leighton as well, working on the same project, but he left early. He left in 2014 before these were doing. But around the same time, Steve Rayleigh, who was the national head of leasing at at Leighton, he was still there. So his role was winding down. But so I suppose in the first instance, I, you know, gathered as much, as I could from them to help me on that journey. And then so that was one part of it, having the right people around. So now Steve works with Avenor as well in commercial leasing. And then
you've recruited the best of the best, then.
Yeah. And so there's that, and then on the other, so there was that, but then the other one is I feel I have I'm a very determined person, I suppose. I've got high ambitions and I've worked pretty hard. So I enjoyed it. So I was very excited to be able to learn all this stuff with knowing that the end goal was going to be I'm going to go and do this stuff myself. And so models like that where you're putting in a couple of mil and making 60 out of it is and I suppose enough of a carrot to want to learn it pretty quickly.
Absolutely, especially in a high pressure environment, to get the things done, and especially the stakes are high there. If you don't get it delivered, then there's big consequences for, I guess, all stakeholders involved as well too. So yeah. I'm curious to sort of jump into a little bit more about, I guess, personally for you then. Maybe take us through your journey of development. You would have, been looking at so many different deals, looking at so many. Do you have maybe the worst development moment or investing moment that you've, had in the past along your journey so far?
To be honest, it's it pains me to say it, but it's yet to come. I think. Except that's not me saying I don't make it. I think because I'm still quite young, I'm fully aware that there is going to be stuff that happens. I think we do take a lot of care and put a lot of effort into minimizing risk generally, and so we don't just go for any deal. And deal volume, I suppose, isn't our strategy. Deal accuracy is more our strategy. So being able to take our time, select the right deal, select the right approach, and then not overcommit ourselves to a level that means that we're exposed to something that we can't withstand. So I suppose in doing that, we minimize our risk. One of our projects at the moment, an example of that, I suppose, one of our projects at the moment is a residential tower development in North Sydney, Walker Street. And so that deal has been a slow burn. We started amalgamating individual units in 2016-17, and then we've amassed a 2,500 square metre site and done a deal with the next adjoining owners to create a 4,000 square metre site. And We've now got state approval for a 30-story tower. So it's a big, it's a success in that we've now got approval, but there were definitely moments through that journey where you feel like you've just burnt a lot of money on a site that's not going to come together. And so there was definitely moments through that where the risk was high. But I suppose persistence and the way that we set up those deals in the first instance meant that we minimised the risk of it not coming off, I suppose.
Yeah. So tell us, maybe elaborate a little bit more details, the challenges that you faced, because to get these units and then to get them to come together, did you actually have to purchase these all out, or have they been on an option? Yeah. So what have been the challenges that you faced?
There's no residential tower sites in the North Sydney CBD. They are very, very strict on maintaining the commercial core.
Yeah.
And so this is the only R4 high density residential site in the North Sydney CBD, and it's on the Warringah Freeway, and it's next to the Warringah Freeway, and so it'll have permanent uninterrupted views of Sydney Harbour and the Opera House and the Heads, and so it'll be a very highly sought after product once it comes online. And so I think part of that meant that the initial landowners, the people who own units, they weren't going to move unless it was outright buying, essentially. And so to do that, we mounted a war chest and had to go in and start working through each unit.
Wow. So just to clarify, how much of a war chest did you actually have to accumulate, if you mind me asking?
I don't know if I can say. I think there's still some sensitive stuff out there on this one.
Yeah, fair enough. What about the amount of units? How many units did you say there were that you had to actually purchase?
We bought 24
Okay.
units, and then came to an arrangement with the adjoining. There's 3 more lots to our north, and so I think for a planning outcome, it's a good outcome to have. So these are the only undeveloped sites or developable lots in that area. And so originally we were just going to go with ours, and those would have been a separate development needs to be pursued. But we came to an arrangement with the states, essentially saying, we'll put the planning across theirs as well, so that we all participate in uplift and we can redevelop the whole precinct so that there's no chance of isolation or anything.
Wow. I mean, obviously, you've said it's been a long, slow burn. And I guess what I'm trying to understand here is, what was your initial sort of vision for that area? Because, you don't just go and jump into there and say, I'm going to develop that.
I suppose it was a pretty, it's a very obvious one. Around next door is a 22-story resi tower. Over the road is another 23-story resi tower, and around the corner, council's rezoning its own car park to be a 60-story tower, and the metro station is 200 metres away. That's going in at whatever that is, 50 stories, and then the next one down, Winton's delivering the Denison Street, which is 40-something stories. Dexus just finished there, 100 Mount Street, which is similar height. So there's and the North Sydney CBD, the council has lifted the height across the whole CBD. So there was this huge uplift. These are these little red roofed apartments that were built 80 years ago, and they're kind of falling down and the like. And it's in the CBD. So we started off on it when I was still wrapping up the Vodafone tower, hunting around for what's next, and so as that was coming off, I started turning our attention to that.
Yeah. And have you had to, I guess, spend, besides the time and the effort and knowledge that you put into it, have you had to invest any of your own capital into it, or have you actually gone out and funded this whole thing?
This one we've brought in. I suppose we've got sweat equity in on this one, and then the cash has been funded by a capital partner.
Yeah. What I love about hearing about these stories is that it shows to investors that you don't always have to use your own funds to be able to create a deal, like a development deal like this, because I guess there's a misconception out there that if you want to build your portfolio, if you want to do development, it's going to require a lot of capital, and people think it's your own capital. But in actual fact, if you know how to structure your deals, like as you've been doing, working in the banking sector, you can actually find that capital to be able to invest, into these type of deals. But as long as you find the right deal that is profitable, then the rest comes together. Obviously, with time.
Yeah, exactly. So I suppose that's one example, and then one other one that I suppose it's not just it wasn't necessarily about another one that's been a slow burn but has been successful of late is our approach. So we in 2014 we started having a go at. So Google was in the market as a tenant, and we approached the state government and said, we want to put a tech precinct together for Google, and we're going to do it at Glebe Island. And so we had a consortium of John Holland and MTR who run the Northwest Metro Rail, and we had and then Leighton we were still at the time, and Google, and we started doing that together. But Leighton Group went through a restructure, Leighton Properties closed, and so Google started off again with Lend-Lease, and the state took that asset to market. So that was the first crack at a tech precinct. And then around the same time, Atlassian were looking to where they could potentially anchor a tech precinct, and we were looking at Australian Technology Park with them, and then at the same time, or similar time, the state government was out with White Bay for the next round of tech and innovation precinct at White Bay. So that didn't go ahead, and so we've been involved in that world for a while, and I suppose in terms of things not coming off, that for a number of years was just not happening for us. We were having a few cracks, a few false starts with different capital partners, with different tenants, and so we bid pretty hard for White Bay with some capital out of Singapore, and then Multiplex came in as our delivery partner initially, and then that process wrapped up for the open, for the market, and then. But we worked really hard with Atlassian, and then eventually, and you might have seen in the press over the last couple of years that now we've secured a site at Central Station, and we're anchoring a new tech and innovation precinct at Central Station in Sydney, and so
fantastic.
So it's like similar to the Walker Street thing, is this roller coaster of you putting in a lot of energy and over a longer period of time, and then then you work your way out of those risk positions into a position where then they start, you start kicking some goals.
Yeah, that's fantastic to hear. I'm sure that there's a lot of time and effort and sweat equity that goes into this. How do you actually survive through this? Because a lot of it's been spending capital investment to actually do this, and a lot of work that's involved. How do you actually survive through paying yourselves and I guess living, because you got to also have cash flow somewhere to live. How do you do these type of things without that?
I suppose part of it, when we kicked off at first, we didn't have much of our own balance sheet. It was doing these sorts of structured things where we essentially bring the institutional knowledge of a tier one development firm, being Leighton Properties, and then we white label that team, because we had a number of people from the Leighton team that Pete and I brought into our team, and then we started building out the team around us, and so we would white label that into non-development firms. So landowners who don't want to give up their asset or want to retain an asset on completion but don't have the development expertise, we will white label in and deploy our skills for them, and then participate in the profit or participate in whatever it is. So there's that sort of thing. And then other ones is, I suppose, cash flow is which is what you've identified, I suppose, is critical to it all. So we landed a $1.1 billion hospital project in Brisbane, which is Hurston Quarter, run by Australian Unity. And so they were one of our first major projects which we started working on with them. And so I think there was a lot of that service-based revenue that in establishing some of these, and then in that we would structure some success fees, and so it would essentially be in exchange for deploying our, I suppose, IP on behalf of these firms. We would structure in which we could do in a particular market, call it Central Station. We could deploy that across a number of sites down at Central Station with a number of parties, and we would say, okay, well, if we partner with this group, then we'll participate, and then we're committed to that site and that. So I suppose that's how we kicked it off, and then that gave us a bit more firepower to be able to take a bit more risk, I suppose.
Fantastic. Yeah, it's fascinating. I guess that's the thing that a lot of businesses struggle with, and they don't survive due to cash flow, because if you're starting a property development business, there's so much capital that's involved and intensity that happens at the beginning. Until you actually sell the product, you won't get anything back in, and then you get these lumps of cash. But to survive, say 2, 3, 4, 5 years, how do you continue to fund that, for that time being? And that's a difficult, situation to be in. And as you said, you're very fortunate that the service-based business there that has been able to support, the funding and so forth. And then obviously building up that capital from all the different first institutions and so forth. It's phenomenal, I guess you could say. Just wondering, I guess over this whole journey that you've been through, Do you have one particular aha moment that you could share with us that's sort of like, wow, this is the time?
Aha moment. It's a tough one. I suppose I feel like I'm coming into a bit of a moment around that at the moment. The next 12 months is going to be quite formative for the firm. Where will be, I suppose, some of our revenues will be dropping over the next 12 months, but will be, I suppose, coming in over the next 12 months, which has turned my mind to the next strategic phase of our growth. And so I'm starting to build some more governance structures, bring some more skill sets in so that I can posture ourselves for raising capital, deploying our own balance sheet on a bigger scale. And so I think the aha moment is, I suppose, the last 4 years has been a lot of grind and a lot of, like I was saying, sweat equity. And then now, as I see the opportunity that comes from some of this, having some balance sheet deploy, it kind of makes me think, that is absolutely a ticket towards opening up a whole lot of opportunity that before I felt like wheels are spinning a lot. Now I can start saying, so the way that I'm thinking at the moment is a bit different, I suppose. And I suppose that's an example.
Oh, that's fantastic. I mean, like, I can totally sympathize with you on that because to get through that period of time, the light is at the end of the tunnel, and it's just a matter of time for this to happen because you've got all the foundations in place. It's just timing, I guess, at the end of the day.
Yeah, that's it.
Excellent. So let's talk a little bit more about, I guess, your why behind it and maybe the mindset behind a lot of this. Why do you think you actually wanted to actually go in to become a property developer? Because you've explained a little bit about your background, how you've met a lot of these high net individuals, but what's your main why or your biggest why behind this?
To be honest, I'm not particularly sure why property specifically. People have asked me that before. When I was choosing to go and do property economics, I was just at a bit of a loss, to be honest, about what the options were at hand. I think part of it, I didn't want to do something that was just a placeholder standard thing. In fact, that's probably a common theme across a lot of what I do. I don't buy into just standard run-of-the-mill, living, I suppose.
Yeah. I mean, like, you wouldn't just go out there, do a 9-to-5 job, and that'd be it. You want you're an entrepreneur.
And I'd heard a bit. I think I just heard from other people that property is good fun. I didn't particularly know what it was or how it works, and that I knew that you could make money out of it, and I knew that. And then I suppose part of the decision making around the decision to go from banking to development, that's probably part of what I can probably talk to, is that when I was at uni, or when you in investment banking, you've got a huge amount of people that have ended up there because they've done commerce law degrees and they're hyper competitive, and they're at school, so they're highly intelligent people, and they're working really long hours, and they make a particular amount of money, and they're in a structured career progression that you are at the mercy of the control of a lot of other stakeholders and senior stakeholders that can probably influence your success or not. Property, I kind of formed this view, right or wrong at the time, that you're not in a space where, it was particularly in, I suppose, the early days of it, or you're not in a space where there is hyper competitive commerce law guys who have got 99 or in their high 90s UAIs and are sitting at their desk, and so I felt, well, but you can still make just as much if not more money, and you can, I suppose, work less if you work smartly.
Yeah, so it's like book smart versus street smart. If
Yeah,
you're street smart, you don't necessarily have to have all these qualifications and degrees and everything to get into property development, because it's about relationships, it's about hustle, it's about persistence,
yeah.
grinding, the hard work, that kind of stuff. That's what I'm
So I
hearing.
saw, yeah, so I saw some of those clients at Investec, right? And like a bunch of them had never gone to uni. Some of them, like that guy I was mentioning, you left school early. Um, and some of them were, and so then when you, and so it's not about, I suppose, that it's not a competitive industry. It's a really competitive industry, obviously. Like every man and his dog know about property and are an expert in property because they own a property, and it's and so it's not that you get away from that, but I think it's that I was doing a lot of long hours in Investec, and I was made redundant there. And then at Leighton Properties, it was the same. It was working really long hours and in an institution, and then they, because of structural decisions that were made at a higher level, they decided to restructure, and then I managed to strike an arrangement that worked well, that was part of a redundancy. And so then that was twice, and I was like, well, I'm going to take it into my own hands and do what I suppose I was always wanting to do, and start putting things together. And that's, I suppose, where the thinking came from.
Yeah, totally. And I can see through those challenges that you faced, it really, really enabled you to do a lot more than to be institutionalized into a lot of these places, which I could totally understand, because I've been through there as well. Let's talk a little bit about mentors. You mentioned John Boy at the beginning of this podcast. Sounds like he was a great stepping stone into getting property development. Who else have you actually been mentored or given you sort of mentorship to be able to get to where you are now?
To be honest, that's actually something that I'm looking into at the moment. I was lucky enough. So at Investec Bank, David Gonski was the chairman, and so when I was setting up Avenor, I'd reached out to him a couple of times before, and then I just went and caught up with him, and I suppose being able to just have a chat with someone like that gives you a really good insight into I suppose potential in business. And so, but I wouldn't say that he's sort of a mentor, because I didn't. It's not like an ongoing thing, but at the moment, that's something that I've identified is something I want to build on. So I've started the process a couple of months ago, putting an advisory board together for Avenor. So speaking with some, I suppose, executives and managing directors that I've come across over the years, I've started to do, just to start piecing together who the right people are to put some strategic input into the firm, and then some, I suppose, governance oversight into the firm. And so speaking with a few people about that, and so yeah, hopefully that comes along.
Fantastic. Talking about resources, maybe books as well. Do you have any books or resources that you could share with the audience that you've read, whether it be property, whether it be business, personal development, that has impacted your journey?
Well, that's a funny one. I've kicked off some business coaching at the moment as part of this. Like I was saying, next 12 months strategic growth is, we've got business coaching and advisory board and some new hires as part of that. But one of the ones that I've just started listening to is The Road Less Stupid.
I've never heard that one. What's that about?
Yeah, I've literally over the last couple of weeks I've been ripping into it, and it's essentially exploring this concept of how intelligent investors, and this actually rings true for those clients from Investec, where a bunch of those people had been bankrupt once at least, but sometimes a couple of times. And so the Road Less Stupid is about this concept of avoiding dumb tax, which is where, as a result of poor decision making, you make a loss. And so, what is it that you can do to minimize, still, maintain, your revenue growth, but minimize the risk of loss by avoiding stupid decisions. And so I know the chapter I was on last night is talking about thinking time, and so they're talking about having a particular period in each day, or period of time in each day, short period, where you just sit and think about the big issues and actually accurately identify problems that need resolving, and then come up with a strategy to solve them. I haven't started yet because I only did that yesterday, but it was interesting.
Yeah, it's a really good concept. And I think just from personal experience, when you actually have time off and and space, I should say, to think, that's when the best things come out of it. Because I know in my experience, when I've actually had, a few days off or a week or whatever, and just switched off from, working in the business and actually sitting outside of the business and then thinking about the problems, it just subconsciously just comes out and you find a solution. Because we're always running day-to-day things and we're just, going through the grind. And when that happens, you don't get time to have that space. And I think I can totally relate to that. It sounds like a good book, actually. Do you know who the author is behind this book?
Oh, I've got it right here. I'll tell you. It's I've got it on Audible, actually, so you don't have to spend much time. It's by Keith J. Cunningham.
Ah, okay. The name rings a bell.
I've actually been recommended another one, which is the Legacy by James Kerr, which is about the All Blacks, which is apparently good about leadership and team building and high performance teams.
Definitely have to check those two books out. Yeah, it's good to be able to hear a different perspective as well too, from different angles. So that's really, really good resources that you can share. All right, so just a couple more, I guess, questions is, if you say you met yourself 10 years ago, what do you think you would have said to him or what do you think you'd say to him?
Yeah, I suppose I'd say do what you're doing. I'm kind of really enjoying what I'm working on, I suppose. And it's definitely a lot of hard work, but I think being able to find the right balance in that work. I think in the early days, actually, if I could talk about the early days a bit, I think working a bit smarter rather than harder could have helped. A lot of long hours, late nights, slogging away, trying to work through it. And then in hindsight, there wasn't many other people doing that. So maybe I could have shared the load a bit, I suppose. And then and then surrounding yourself with the right people.
Totally. That's really, really good advice. So let's flip it around the other side. Looking forward to the next, say, 5 years, what are you most excited about in your journey?
Definitely about building the firm and building the capacity of the firm for the funds management component, or I suppose being able to raise more capital and deploy more capital, I suppose, and definitely building the team to, I suppose, supplement that skill set into the team is definitely something that's exciting. And then if I go to the end of that 5 years, definitely looking forward to having completed some major projects. So that Atlassian Tower Essential is like a 70,000 square metre office tower, which, is part of that tech precinct. It's been on a very long journey. And so in 5 years, that'll be complete. And so it'll be good to be able to, stand here and look at that and, see it as one of the most sustainable buildings in the world. I think that'll be pretty exciting. Yeah.
Yeah. And you can look up and go, I did that.
Yeah. Yeah.
That's fantastic. Yeah, that's great, James. So I guess the last question I have for you is, how much of your success is due to your skill, intelligence, and hard work, and how much of it is because of luck?
I would say luck. Lucky. The luck component of it is that I, born into a good family and have a good set of morals and surroundings. So I'm definitely very grateful for that, and I did nothing to deserve that part of it. But since then though, I definitely attribute it to a lot of, maybe 80% of it to the hard work component. The luck component of it might be that I think the redundancies that kind of force you to make a decision. If they didn't happen or they kicked down the road, then who knows what might have happened. Might be in a different firm, or might have just wanted the golden handcuffs might have been put on, or it would have been too hard to get away. And so being able to get that nudge, I suppose, is definitely help. But it's taken a lot of hard work, and it will continue to take a lot of hard work. That's for sure.
Yes, and I can see that there's going to be great success ahead for you as well too. So James, if people want to actually get in contact with you, find out more about your developments, or even want to participate as being part of maybe an investor towards your firm, what's the best way they can reach out to you?
I think flick me an email. I think that's a good approach, and which I can provide. And reach out. Happy to touch base. Happy to have a chat, and happy to work with you if there's something we can work on together. That's for sure.
Fantastic. Well, that's great to hear. Well, James, thank you so much for your time today. It's been a real pleasure to be able to have you on the podcast, share your story, and you are doing some amazing, wonderful things, especially, buildings that are going to potentially one day become iconic for Sydney. So thank you so much for coming on.
Very welcome. Thanks so much for having me.